Welcome to the video on K-1 entry. So I'm gonna go over all the most commonly used items from K-1 and where to enter them on a tax forms using 3 tax software. So I'm gonna use Drake tax software, Proconnect and CCH Axcess just to make it fun. But the idea of this video is just to explain you the flow and where it goes in a tax form and how to think when you research all these line items. So let's dive in. If you're new to this channel, my name is Kat and I'm a CPA with more than 10 years of experience working at music business management at Big Four, and I have been working for myself for the last couple years. The purpose of this channel is to teach you how to use different tax software. I will be talking about tax concepts and everything that any tax preparer needs. So please subscribe to my channel. If you're interested in any of the tax courses I'm selling, please check it out my website remotecpainla.com. Sorry for interruption. Let's switch back to the video. Alrighty guys, so we have a basic simple K-1 that we just received for our client. So I just want to go over like how to enter it, where it goes on the tax return, and also use different kind of tax softwares to show you how to enter and how it actually flows to the form. So in this example, I'm going to use Drake tax software, CCH, and Proconnect. I know. I wanted to add more. I wanted to add like 10 softwares, but I thought that might be confusing, so I just left 3 of my favorite. Well, let's start. So here's K-1. So it's issued to the partnership name, not so boring CPA, obviously. And for example, it's issued to me, Kat. So what else will be filled up on this form? So the partnership EIN will be here, which is like super important because I don't think we'll be able to e-file without entering partnership EIN. And also, actually not a very interesting fact, kind of like sad fact, but if you do enter EIN incorrectly, you will get reject. So make sure to enter EIN correctly. So here you go. So here we'll have like a partnership name, we'll have the address of the partnership, we'll have the name of the partners, the address, if they're general partner, limited partner, domestic, all this kind of stuff, profit losses, share of liabilities, and their capital account. So here I just put the information that I see on K-1's majority of the times, so those are the most common. I also added a few items that are not common. For example, QBI deductions, majority of investment K-1s, they do have QBI deductions. So actually, I recorded a very detailed video on QBI deductions that will come up next week. So I recommend to check that out. But we'll talk about in general about QBI deduction. AG deductions, those are gross receipts thing. And those are not very common, but it's confusing if we need that or not. And we'll have this 20N as well that I'm just gonna go over, and maybe foreign taxes. So those are items that are the most common on K-1. So let's start. So ordinary business income, rental income. So this part is actually shows, so usually from S Corp, this will be their ordinary income, and this will be our share, and this would be our share of their rental income. Where does it go in 1040? So on 1040, both of those things, they go on Schedule E. So we'll have partnership right here. On page 2. So page 1 is for rental and royalties for Schedule E, and page 2 is for K-1s. So it will go here. It has a differentiation between passive and unpassive income, so I'm going to talk about it in a minute. So I will show you quickly. And I'm sorry, I'll talk really fast in this video because I want you to enter all the information as fast as possible. And it's actually September 29th, and I have 100 more tax returns to review. So anyways, hope that is not too fast. You can always slow down the speed on YouTube. So on Proconnect, this is one of the 3 softwares we'll be using today. I'm sorry, I'm just having way too much fun with this. Hopefully you do too. So we'll put on line 1 and line 2. So every entry, it just corresponds to the K-1, right? Super simple. So after we enter that, we go to Schedule E, and that should flow on our Schedule E. Schedule E, and right here we'll have passive income, right? So you would ask me probably like, why does it go under passive automatically? Why not non-passive? So majority of K1s and majority of tax software would assume that the income is passive, and because it's from K1, the investment in something. So if it is not passive, and what it, like, you're probably asking me like, how do we know it's passive or non-passive? So if it's our taxpayers K1 from partnerships that they manage and they run business, those are non-passive. If it's K1 from real estate that are taxpayers actively involved, those are not. So taxpayer, the client should be actively involved in that activity to be non-passive, or be a real estate professional. So if it is non-passive, there is a places in every single software that we can choose not a passive activity or active real estate if they are real estate. Work in real estate. And if you do check those boxes, then our entry will move to this non-passive income, right? So why is that important? It is extremely important because so we separate passive losses and passive income separately, and we also track passive losses and passive income separately. So it's important to make sure we include it as passive or non-passive, and we stayed consistent each year. And so for losses tracking purposes, and also like passive losses, for example, passive losses are not going to be allowed, but active losses would be allowed because it's our clients. Let's imagine we just have $100 in ordinary losses, and if it's a business that our client is actively involved, then those losses should be allowed, right? So non-passive losses, and they flow to Form 1040 right here. If the losses are passive, let me uncheck this box. So it is passive. Losses are not going to be allowed because passive losses are not allowed until we sell the investment. So right here we would not see anything, right? And so those passive losses, now passive loss limitation will show that $100 of losses were disallowed, and they will carry forward to the next year. Should be a place here somewhere showing that it's carrying over to the next year, prior year. Well, I don't know exactly where it is. Oh, here you go. NOL worksheet, maybe? No. Well, in any case, I do know, and you should know too, that those losses are carry over to the next year. I might just need to look into more details. Disallowed passive loss, and it should be carried over to the next year. Interesting. I think it should be a place right here somewhere that it's carrying over to the next year. Any case, this is not the purpose of this video, so we're going to move on to another things. All right, so this is what we see majority of the time for this part of K1. So it shows like ordinary and rental activity. Then this part will show investment activity. So it has interest, income, ordinary income, qualified dividends. I'll talk about royalties later because it goes on a different schedule. But then net short capital gains and long-term short capital gains, right? So now, and maybe under capture, I'm just gonna enter all of them. So all of those things, they go on different schedules. So for example, interest income, it goes under our 10. First of all, it goes under Schedule B, where interest and dividends go, but later on it flows to our Form 1040, and it goes under line 2B, taxable interest, and then 3A, qualified dividends and ordinary dividends. For capital gains, eventually they flow here under line 7. But before that, they go under Schedule D. And what I'm trying to say before that, like items goes income items goes on different schedules, and then they all reconcile it on 1040, right? So I'm kind of like mentioning both, but usually they go somewhere else and then they flow to 1040. And majority of the time, and this is very basic, but who knows, maybe for somebody it's not very basic. Like right here it's gonna show like Schedule D, so it came from Schedule D. And taxable interest, it doesn't show here, but it's supposed to also in the similar manner come from Schedule D. Well, in any case, here, capital gains, we have those boxes, net short-term gains from partnerships S corporation, and right here is the same, net long-term gain from partnership S corporations. So now I'm going to show a different tax software just to have fun with it. So I'll just enter S Corp K1, some investments, and I will enter our, let's see what I have here. I have $30 box. I need to enter all the boxes. I'm sorry. So box 5 will be 5. And then let's see what else I have. Ordinary dividends. So same idea, different tax software, but it's the same idea. We just enter like stuff line by line. And then we have short term, which are 30. And long term, 40. And I think I also enter, section 1250 will be 50. I did not make this 50 on purpose. All right, so let's take a look where it goes. So Schedule B will have interest of $5, and it tells me it came from this K1 some investments. Then on 1040, we'll see our qualified dividends of $10 and ordinary dividends of $10, right? Similar to where we have it. And then when we go to Schedule D, on this line, where it comes from K1, we'll see our short-term gains, long-term gains, 12, 30, 40. And then we have this 1250 came here somehow. It is possible that I need to enter income to make sure section 1250 actually flows. But in any case, this is an idea. That's an idea how we enter all that information, and it should all flow here. So we have our short term and long term, right? Alrighty, so next one, royalties, right? So royalties, box 7. And for royalties, I'm gonna use CCH Axcess because why not? I'm so sorry. So royalty income. And I forgot, what did I use? 20, perfect. So royalty income, and I already showed you this Schedule E, and I explained you that on page number 2, information from K1's flow. On page number 1, we have income from rental real estate and royalties. So here our $20 of royalty income should flow. So let's see if it does. So I go to Schedule E, page 1. And here, right on the left side, I have this some other rental, but here I have royalties received of $20, right? Awesome. So that's kind of it for this part. Section 179, it goes on a, well, let's just enter it in Proconnect, I guess. Box 12. It should go on Form 4797 if it's allowed. It's box 12. And how much did I put it here? 80. Okay. I'm sorry, 80. So for section, in order to take section 179, we should have some income. So I haven't entered any income, so I almost feel like it's not gonna flow right now. Oh no, it will actually go here, and then it will tell me if it's allowed or disallowed. So exactly like I just mentioned, it told me we have this thing from K1, but then it's disallowed, carry over, disallowed to the following year. All right, we're doing really good job. All right, box 14, self-employed income. Which tax software do you want to see now? Probably let's do Drake, right? Let's see, where do I have Drake? So box 14, 90. Box 14. So I start entering stuff under 1120S, and did I? I did, and this one is actually 1065, so our boxes are different, and I'm sorry, so don't make mistakes that I do, please. So anyways, but it's okay because there is a self-employment income here as well. It just would be called something else. It would be a different box. Let's see if I can find it. Maybe not as easy as I thought. Oh well, I'll go. Oh, you know what? It's not going to be there because it's just a little bit different. S corp, supposedly not to have. It's supposed not to have self-employment income in general, so it shouldn't have that box in there. And let's see which one are we talking about? It's 14 for partnership. And we have 90. So this thing should go, and again, yeah, I don't see that this form came up. It will be part of calculation for self-employment tax, but I think because we have losses here and we don't have any information, I almost feel like it might not flow right now. Let's see. Yeah, I don't see that form in here. Well, in any case, should be part of self-employment calculation if you enter all the information correctly. So it should flow to that. AMT tax. So this will be part of AMT tax. So we just enter as we always do. We just go to our box, enter it under the box, and supposedly if the taxpayer is an AMT is additional tax I need to pay under alternative minimum tax system, then it will generate the form for AMT. If it's not an AMT, it's not going to generate that form for AMT. Tax-exempt interest. So this one goes to on form 1040. We have this tax-exempt interest 2A, so it should go right here. Let's try. And how much is it? Tax-exempt interest 110. 110. And it's box 17A. Did I miss it? I feel like I did. Oh, I'm sorry. Alrighty, so while we're waiting, I'm just gonna take a look. What else do we have left? We have distribution. So distribution is just something we can enter, and it will just reduce our basis if you do keep tracking bases for our tax return, but it's not gonna change anything on the tax return. So just let you know that distribution doesn't go anywhere. So our tax-exempt interest should go in here, and for some reason it doesn't. Let me see why. Let me check it out why. Oh, I'm sorry, I entered it in a different place. My bad. Why didn't you stop me? 18A. So that happens, and that's why it's a good idea to not just enter all the K1 information and hope it's all good and the tax software will do a job, but using some kind of work paper or just kind of like checking if make sure it goes to the right place, because we can all make similar mistakes. So right here, tax-exempt interest. Perfect. Awesome. To prove my point that I know what I'm talking about. All right, 20A. So 20A. Oh, actually, there is a really cool thing I wanted to show you too, but I think I might have closed it. It's called partner instructions for K1 entry 1065. So it will take you to this form. And this is like lots of pages and pages of instructions. But what I really like about it is those pages. So basically it tells you right here, based on a box number of item, where it should be reported on 1040. So for example, let's look at 20A. 20A, it should go on form 4952, and then we can just Google this form 4952. So it's investment interest. So this is the reason why we enter it, and that's where we should see it entered. So just a reminder, this is partner instructions for Schedule K1. It doesn't have everything, but it has some details. So I found it really helpful. Maybe you will too. And let's see what else is here that is, okay, 20Z. So those would go to your form 88995 when you enter it. So it's going to be here the K1 number. Or if you have a couple underlying investments, you have to enter all of them separately, because in order to calculate QBI deductions, the W2 wages and adjusted basis limitation apply. And if it's a little bit too much at this moment, check it out my other videos that it's going to come up on 20Z QBI entry from K1. But this is a form where it goes. And let's see what else. And then this form AG, so let's see, AG. If you take a look here, AG is for gross receipts for section 448. So for this part, it's actually not every tax software have entry for this. So for example, let's take a look if this one has Proconnect, line 20. It just doesn't, you see. But it's gonna tell us somewhere here, I hope, yeah, it will tell us what it is for. So basically, this form used to determine a gross receipts test. So basically what it's trying to tell, for this gross receipts test, a taxpayer has to have more than 27 million aggregated gross receipts from different sources, and then they have to fill up this form 8890. Majority of the clients we work with, they don't have 27 mil in gross receipts from different investments, so that's why it's kind of not mandatory, but it's important to remember if you're preparing a huge tax returns for some investors. Alrighty, so that is that. And let's see, what is this 20N that I wanted to just mention a little bit. 20N. Okay, so this is a little bit confusing because lots of K1s have this business interest expense, and I was like, do we enter it? When we don't, do not we enter? Do we or do we not, right? And like, for example, like Proconnect and like Drake doesn't have the entry for it. CCH Axcess does. So like a business interest expense. So this one, it says in informational purposes only. But in order, we also should know, so for example, this thing, it is actually specifically for corporate shareholders. So when the partnerships issue in K1, they don't differentiate if it's individual or not. They just send you all the information, all the footnotes that you need, and then you figure out what is important, what is not. So for this one, they also might issue this K1 for corporations. And for corporation, for example, this note will be important and some other notes won't. Well, so that's and foreign tax credits, I'm sorry. So important as well, really need to enter. So for example, here, let's see, box 21, foreign taxes paid. We'll enter this here, but also if you have any foreign taxes, we also have foreign income and foreign expenses, right? So we do need to fill up this form 116. I mean, there is a threshold for this form. I feel like I don't remember exactly what the threshold is. It's like a 500 or something. Yeah, 300. If it's more than 300, we have to fill up this form. If it's not, we don't have to. So basically this form, and I'm sorry, I just really want the form. I don't want instructions. This form, we put the foreign tax credit flows here from K-1, but we also need to include the income and expenses allocated to foreign income in order to be able to take it. If you don't have this, then the foreign tax credit will be disallowed. Well, I think that's it. Well, I hope this video was helpful for you. As a reminder, make sure when you enter K-1, you do not enter only items on a face of K-1, but make sure you look at the footnotes. That is extremely, extremely important. So please don't forget. And comment below if you have question about any line item on K-1, and I'll make sure I'll do my best at least to help you out. Have a great day.